Sarge986 President. How's it going? Stephen Guilfoyle. Haven't seen you in so long, Sarge. How you feeling?
It's been a while, Charles. Glad to be here.
Let's talk about Wall Street. So this chart is what economists in Wall Street call productivity gains, right? I always say it's a euphemism for how you can do the same job with fewer people. It's great for companies. It's not maybe necessarily great for Main Street.
No, it's why you have to be invested, because as they take your job, you better have a source of revenue. So I encourage everyone, every retail investor on down to whoever you are, save something, invest something, even if it's just in an index fund, because you have to defend yourself. This is coming for you no matter what line of work you're in.
Yeah, by the way, this is their new robot arm over there. They call it the Blue Jay, and it's so effective. And it does speak, though, to opportunities also. As an investor, I did a big town hall last week, and I talked about some of the robot stuff. If they're going to get rid of 160,000 workers by 2027, where do we find these opportunities? Are you looking at some robot picks here?
Not so much robot, but I think you got to be in big data. You got to be in automation. You got to be in artificial intelligence. Allie just now is speaking my book. I mean, she's spot on with a lot of the things she's saying. You have to be high tech. You got to be quantum computing. You got to be in the forward-looking part of this game.
What about a company like Amazon? Here's Amazon. You said Amazon, obviously, this is probably a late move for them. You can see from their stock price, whether it's year to date, the last year, or the last 5 years, significantly trailing. And it's at a stage like this, when people are contemplating, okay, what parts of the Mag 7 are still worthwhile? Do you chase the ones that have done better, or do you start to kick the tires of an Amazon?
Well, you might want to kick some tires on Amazon, because what do you see here? You see 1.5 million employees in Amazon. You see 225,000 employees at Microsoft, maybe 200,000 at Google, and at Meta, we're talking 75,000. What's the common denominator of the three successful stocks? Right. They have less people. They have less overhead. Therefore, their CapEx actually makes more of an impact.
Let's talk about the semis. They've been driving this whole thing. Every day there's news on the semiconductors. Semiconductor index has done extraordinarily well. Are you a buyer? I know you're positioned, but are there any fresh buys in there? Because this is a magnificent chart.
Well, you might not know I'm long Intel. I've been long Intel for a little while now. My main buys have been AMD and NVIDIA, but I think Intel with the foundry, because hey, we want to make the stuff here, and we're going to have to make a lot of it. And Taiwan Semiconductor is not going to be able to make all of it. So Intel, I believe, with this new CEO, has a chance to join what would be a big 3, or maybe even 4 now that Qualcomm's in the game.
Talking about Palantir, it's a name that you like, and you just raised your target, right? I think your target is now above the street average.
Yeah, I'm the street high.
You're the street high?
I'm up at 226. You'll see there's a 188 pivot here. It's called an ascending triangle that's formed right here, and it's a technical pattern for those folks at home that don't know what that is, but that's a bullish pattern.
Right.
And I've been in, you know where my first buy was in Palantir? My first buy was $6.49.
Wow. How'd you know at $6.49?
Because I was a floor trader, Charles, okay? I lost my job basically to algorithms. I have gone through this a few times. I could see this coming, this AI play, this intelligence play, and Palantir is the best at what they do. I think the only one who's close might be Snowflake, but they're not close.
All right. By the way, the ascending triangle, folks, is, you got the resistance, and then, the chart keeps chopping, and finally it gets to that point, and something big usually happens. SoFi is another name you like.
Oh, I love SoFi. How do you not like Anthony Noto? All right, this kid was a linebacker at West Point for Army football. I remember him. Okay, every single play, tackle Noto, tackle Noto. If he runs an online bank as aggressively as he ran around that football field, you want to be behind Anthony Noto.
I've been saying this year, we're seeing the changing of the guard. Fintech superseding old big-time financial companies, these large banks, Visa, MasterCard. They had these moats around them. Look at this. This is a coin hood. These names suggest there is a changing of the guard.
Without a doubt. I mean, look at SoFi is growing in all the right places, and the growth is aggressive. I mean, record numbers of members, record numbers of products sold, record investment, record lending. I just raised my target on this one, too, to 37, which is also a street high. I'm street high on both Palantir and on SoFi.
Well, I have subscribers in it, so I hope you're right. So now, the rare earth lithium story took a good hit in a way, because China looks like they're backing off their sort of rare earth threat. But this is an opportunity. We still have to go out there and get it while the window's open, right? And this is one name that you like. This is among others. Well, I like it from a risk-reward point of view, Lithium Americas. I've been trading out of MET-C, which is Ramaco Resources, which is more of a true rare earth play. Right. But we made our money in that one. We made over three figures percentage-wise. So I'm flipping into this one. It's a $7 stock, or it's $6.82 stock. From a risk-reward point of view, plus they got some government backing, I like this play right now. It fits into my stocks under 10 motif, because that's where I like to catch them if I can. So overall, you're still bullish on this
I'm
market.
very bullish. I am very. Now they might try to shake us out again. They tried in October and they failed. But I would say you don't want to be. You don't want to be long the defensives going into November and December this year. I think you want to be aggressive. Then maybe you get defensive after we get into the new year.
You know, it's so funny. I mean, I have a lot of smart people come in every single day and say go into defensive, and this has been their worst performance. They're at the lowest point ever versus the S&P. And I understand it may be comforting, but you're missing out on this is a once in a lifetime opportunity, my man. You know what I'm talking about.
Oh yeah.
Great seeing you, Sarge.